Welcome back to the channel. If you are new, please subscribe to this channel and leave your comments below in the comment section, and any question you have regarding the video questions, please put it in the comment section and I'll answer them one after the other. Today we are looking at liquidity, and I'm sure you have seen from social media that almost 80 to 90% of traders now trade liquidity, because liquidity is now the trading style that can be able to overcome manipulations. Okay, if you understand liquidity, the number of times you get stopped out before the move will go in your favor will become low or will minimize. You have a higher edge or probability than traders who don't understand liquidity, because the market moves because of what? Liquidity. Okay, so liquidity talks about what? Orders. We talk about the money in the financial market. That's liquidity. And we talk about stop orders, stop losses. Okay, stop losses of traders, buy stops, sell stops, and we also talk about pending orders. That's buy limits, sell limits. Okay, for breakout traders. So let's say, as a trader, you trade your double top, double bottom. So as something like this, as a double top trader, you take your sell from this point, saying that, oh, price has created equal highs or double top, so therefore market is going to what? To sell from there. And once you see maybe an engulfing candle or any reversal candlestick after the second high, you enter your sell trade with your stop loss here and you expect the market to go. That's all right, that's normal. And what happens is price comes back to this area here, and you know, those who sold here, their stop losses are here and their entries are here. Price will try to move outside this, and breakout traders will say that, oh, we have broken out above this range, this equal highs, we have broken out, so therefore it becomes a breakout. So breakout traders will try to buy from here because we have broken out of a range. So breakout traders will take a buy from there. Breakout traders will take a buy from here. What's all this? I don't understand what this thing is. So breakout traders will take a buy from here. So breakout traders will take a buy from here. Once there's a breakout traders will take a buy from there, and their stop losses will be below here, and we expect the market to keep buying. But what market will do is market will come up here, take the stop losses of those who sold here, and trigger those who kept their breakout buy stops here. It will trigger them inside, then it will come down again. So once it comes down, it has taken out the stop losses of those who sold here. It has taken out the stop losses of those who bought here with their buy stops and their stop losses here, and market will continue moving to the downside. That's one aspect of what? Liquidity. That's a liquidity scenario. Okay, and you also have another aspect that sometimes as a trend line trader you have something like this. You say, oh, first touch, second touch, we expect what? A third touch for the market to continue moving to the upside. So once market comes here, oh, we'll start buying. Okay, once it comes and it tries to show some reaction, trend line traders will enter, and I don't know why my case that. Okay, trend line traders will enter from here, and their stop losses will be right below the previous swing low. And what market will do is market will try to go in their favor a bit, put them inside, come up to take out the stop losses here that they have kept below here, and this one, and it will continue to the upside. That's why you enter a trade, it will stop you out and it continue going in your favor. That's simply liquidity. Okay, so now let's look at the liquidity types and how you can trade them and how to avoid them, and you wait till market comes to your entry zones and you take a trade from there. The first liquidity type we want to look at is what? Equal highs or equal lows liquidity. That's the most common liquidity. Equal highs and what? Lows. Okay, that's the most common liquidity concepts that we all experience every day. So equal highs looks like this. So when market is moving, let's say market is moving in a downtrend. Okay, let's do it this way. When market is moving in a downtrend like this, okay, like this. So as a trend trader, as we all encourage that we should be trading in line with the trend, you mark your supply zone here and you expect market to come in and we continue from there. But what market does sometimes is market won't come in there. Market will try to induce traders. Market will try to lure traders into taking premature entries. Okay, premature entries. Traders that suffer from FOMO, fear of missing out. Market will try to put those traders to push them for them to enter early. Then it will stop them out before it will move. So what market does is market will come. It will come into the zone. It will do something like this. It will form an equal high like this. Okay. So once this equal high is formed, people that trade equal highs or double tops will take their entries here. They will take their entries here, and their stop losses will be around this point, and they will target somewhere here. But what market does is, once the equal highs is formed, stop losses will be here or above this previous high. But this supply zone is still unmitigated. Okay, the other block in this supply zone is still unmitigated. So what market does is, market will lure them into taking premature sell entries. The market will come back into the zone. It will come back like this, stop all of them out. Market will come up and stop all of them out. It will stop all those who took their entries out, and it will what? It will continue selling. Okay, and in the buy scenario, the opposite is the buy scenario. Hold on, let me. And in the buy scenario, you have something like this. Market is moving in an uptrend, higher highs, higher lows, and as a trader, what you are expecting is market should come back to this demand area for you to take your buy entry. But what market will do is market will come in and form something like an equal highs like this. It will lure those who trade double bottom or support and resistance triggers to take an entry from here. This is where they will take their entry. And what market will do is, once they take their entries here, their stop losses will be right below here, and market will come back to stop them out and then tap into this demand area, and then it will continue in that direction. So this is how equal lows and equal highs manipulations are done. And let's go to the charts and I'll show you real trades examples. So as you can see from this point, you can see that market is in the what? In an uptrend. From here, from this point, market has turned from being a downtrend and we are now moving what? Up. So we expect market to continue moving in the upward direction. And you can see that the last candle that caused this break of structure is this candle that caused the break of structure. Okay, let's go to 30-minute time frame and you look at it. Okay, this is the candle that led to the break of structure, and you can also see that in market returning, market will first create equal what lows, like you can see here. This is our first low, this is our second low. Okay, this is more like an equal lows, and after this candle formed, a lot of traders will buy with their stop losses here. This is where most traders would have gotten trapped. After this dodgy candle, they'll say, oh, this is a buy signal. They'll enter with their stop losses here. But what market will do is, market won't just go like that. Market will come in, try to take out those traders their stop losses here, and tap into this original area that we are looking at, and before the move will continue. So as you can see from here, you can see market tries to continue moving. You see, we have formed equal lows here, and market is trying to move in an uptrend. So we are looking at what market is going to do. You can see. Okay, now you can see that market came in, took out these two equal lows, and right after that, market started moving to the uptrend direction or the upward direction. Immediately after these two equal lows is taken out. Okay, these two equal lows. Let me highlight them. This is the first low. This is the second low. Once these two lows were taken out, price immediately started rejecting to the upside. And what do we have? Market went to the upside. You can see. Okay, this is how these equal lows are formed. Let me show you a sell scenario. So as you can see from here, you can see that market is breaking structures to the downside. As you can see, what do we have here? And we have created a lower low from here. So, and you can see that we have this supply zone here that is created, and we mark out the last candle before the drastic or the massive move, which is this candle. So this is our last candle we have marked out, and we expect price to come in there. So as you can see, this is what market is doing, and you can see that market has created a first low. Market has created a first low, or once after this thing is formed, a lot of traders will take their sell entries, and let's see how it moves. Okay, you see we have another low here, another high here. Market has created a first high, second high. You can see, so we have our equal highs here. So at this point, a lot of sellers will take their entry here from this rejection. They will take their sell entries here from this rejection, because they feel like equal highs is formed and we are going to the downside. So they will take their sells here, and their stop losses will be around here. This is where their stop losses are going to be. But market will not just move. Market will try to take out their stop losses, tap into this demand zone, this supply zone rather, and it continue moving to the downside. So as a liquidity trader, once you identify your equal highs, and you know that market will try to take out this liquidity before moving, you quickly take your sell entry from here, and you target the 100% retracement. Okay, then let's see how market played out. You can see immediately market stopped out sellers, went up into this demand zone and this supply zone, and the rest was history. You can see price is definitely coming to, you can see Price is still testing that area. Sorry. Price is still testing that area. Price is still testing that area. And finally, price went to our favor. Okay. So this is how you could have traded equal highs and equal lows. And please subscribe to the channel, and we'll look at the next aspect of liquidity.